Hey, good morning, everybody. Today is Wednesday, October 7th, 2015. My name is Cliff Backus, and this is your push-button-stock-trading.com daily video market review. Stocks closed lower yesterday, while trading volume rose on the Nasdaq, giving the Nasdaq Composite its first distribution day since Friday's confirmation of the uptrend in the market. The small-cap S&P 600 also recorded a distribution day. A distribution day is a trading session where one of the major indexes falls at least 0.2% on heavier trading volume than the prior day. Too many distributions early in a confirmed uptrend can be an indication that the uptrend's in trouble. That noted, yesterday's distribution was not particularly unsettling to the bulls as both indices closed in the upper half of their daily trading ranges. Distribution's a sign of institutional selling. With the indices closing near the top of their daily ranges, the institutional selling yesterday really wasn't that ferocious. While volume didn't rise to the level of distribution on the IBD 50 or the 85-85, both were down more sharply than the Nasdaq and the S&Ps. The IBD indices are continually updated to reflect leading momentum stocks and gives us a good indication of what the market leadership is doing. Currently, that leadership appears to be conflicted and directionless, certainly not the type of activity we'd want to see from momentum leaders in a confirmed uptrend. In yet another sign of confusion in the market, on the day when the indices were down, advancing issues bettered decliners by nearly 5-4 yesterday. The New York Stock Exchange advanced decline line continues to look a bit less bearish, but certainly not bullish. We'll take a little bit closer look at the advanced decline line a little bit later. For the fifth day in a row, large capitalization stocks outperformed small yesterday, but small caps continue to slightly outperform on a 10-day moving average basis. Small caps outperforming is behavior more typical of a bull market, but the trend recently has been toward outperformance by large caps, indicating that the bulls should proceed cautiously. Our market timing model on the S&P has gone to our most aggressive rating, a margin signal. We'll talk about that a little bit more later, indicating that aggressive traders can begin to utilize margin here, while more conservative traders will want to begin to redeploy capital on the long side. That noted, the Nasdaq remains on a primary sell signal with a secondary indication of aggressive buy. Our most conservative traders may want to wait for the Nasdaq to confirm the buy signal on the S&P 500 before deploying cash. The O'Neill timing model gave us a follow-through day on Friday, so we're now in a confirmed uptrend according to O'Neill. This is a squirrely market prone to significant whipsaws. Our timing models are becoming a little bit more bullish, but the Nasdaq is still on a primary sell signal. If you're going to go long in this market, I suggest that you keep your stops at their tightest levels, at least until we take out the highs of September 17th, as I'll explain when we get into the chart analysis. In the meantime, you probably won't get too hurt remaining in cash. Be careful. Okay, I want to do something a little bit different today. What we're looking at here is the advanced decline line on the New York Stock Exchange. Notice how the advanced decline line has been in this fairly significant downtrend for about 6 months now. I've been indicating that the advanced decline line is looking a little bit less bearish. You'll notice that even though the market is lower, the advanced decline line didn't undercut its recent low. If we can take out the high in this level on the advanced decline line, that would be a little bit more of a bullish indication. Take a look at what the Nasdaq Composite's up to. Nasdaq yesterday was down 32.9 points, or 0.69%. Closed at 47.48. Notice how the Nasdaq closed in the upper half of its daily trading range. For you followers of William O'Neill, we are on a confirmed uptrend in the market. We have been since September 25th. Yesterday was the first distribution day since the confirmation of the rally. Distribution day's a little bit of a concern this early in a confirmed rally, but with the Nasdaq closing in the upper half of its daily trading range, that distribution really isn't as bad as it could have been. Right now, the Nasdaq is bracketed by support down here in the 4292 area and resistance up here in the 4900 range. The Nasdaq is on a sell signal on our market timing model. In order for the Nasdaq to go to a buy rating, we would have to take out this upper envelope. This envelope is a 1% envelope around this 21-day exponential moving average, which we show in pink. Also, the 21-day exponential moving average and the 10-day simple moving average, which we show in green, would have to be trending higher. So right now, the Nasdaq remains on a sell signal, but our secondary indication is an aggressive buy. Let's see what the S&P 500 is up to. The S&P yesterday was down 7.13 points, or 0.36%. It closed at 1979. Trading volume was below the prior day. The S&P 500 is in a confirmed uptrend and has been since September 25th. Right now, the S&P 500 is bracketed by support down here in the 1867 area and resistance up here in the 1993 range. Yesterday, the S&P balked at that resistance level. In order for me to get a little bit more bullish, I would want to see the S&P close above this level. And more preferably, I'd want to see it close above this level up here. If we were able to do that, we would put in a low followed by an intermediate high, followed by a higher low, and then a higher high. That would lead me to believe that this uptrend was a little bit more convincing. Right now, our market timing model is indicating a buy signal as our primary signal on the S&P 500 and a margin signal as our secondary signal. And what that indicates is that our most aggressive traders can begin to leverage up their portfolios utilizing margin. More conservative traders may want to begin to work back toward fully invested. Keep in mind, however, that while the S&P is on a buy signal, the Nasdaq continues to be on a sell signal as its primary signal. And so our most conservative traders may want to wait for the Nasdaq to confirm the S&P 500. I want to talk about our timing signal. The way that our timing signal works is we have a 21-day exponential moving average, which we show in pink. That 21-day exponential moving average is bracketed by this envelope, which brackets the 21-day exponential moving average by 1% on either side. In order for either the S&P or the Nasdaq to go to a buy signal, the index has to trade above that 1% envelope, which the S&P did on Monday. The 21-day exponential moving average has to be trending upward, and the 10-day simple moving average, which we show in green, also has to be trending upward, which it is right here. And so the S&P 500 right now is currently on a buy signal. Let's take a quick look at a couple of stocks. First stock I want to take a look at is Inphi Corp. Inphi designs analog multiplexers, encoders, amplifiers, and memory buffers for servers, routers, and storage equipment. Stock right now is in this third stage base with a pivot point of $27.11. It gets a 76% checklist rating. We have this trend line right here, and the stock broke above that trend line yesterday. It actually gapped above that trend line on heavier trading volume than any down day in the past 10 trading sessions. That's our definition of a pocket pivot. Inphi can be bought by traders at this point, keeping in mind that our market timing model is conflicted. The S&P 500 is on a buy, the Nasdaq is on a sell, and so you may want to proceed with caution, keep your stops at their tightest levels. Last stock I want to take a look at today is Vipshop Holdings. Vipshop is a Chinese online discount retailer offering branded apparel at discount prices in limited quantities via Vipshop.com. The stock has been in this fairly significant long-term downtrend. It gets a 64% checklist rating, and notice how we broke above this downtrend in the past few trading days. Trading volume has been relatively high recently, higher than the highest down day over the past 10 trading sessions, which gives us a pocket pivot. Vipshops can be bought by aggressive traders here. I would want to keep my stop at about 7% below the 50-day moving average. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.